Franz Wenzel is head of investment strategy at Axa Investment Managers, where he oversees assets under allocation of something like $600 billion. He joins me now from Paris. Franz, well, walk us through your basic thesis here as to why this rebound can continue.
Well, basically, we think that, first of all, the macroeconomic settings are clearly to improve. We saw that from GDP figures, we see that from high-frequency data. All of that confirms that the GDP is going to continue to expand into next year. That is the first prerequisite. The second element is basically central banks will remain fairly accommodative. Even though a lot of exit strategy discussion has been going on for a while now, we think that next year, 2010, we'll see no major central bank hiking interest rates. Obviously, I'm talking about the G3, G4 countries here. We will see emerging markets hiking, but that could cause some volatility in equity markets. But we remain convinced that in Europe, in the US, we will not see any interest rate hike. And last but not least, we think that earnings are recovered by 25 to 30% globally. And that's the second and the third layer, basically, for our equity conviction.
Yeah, you talk about liquidity. There's lots of liquidity, but there's not being shown up when you look at equity markets in terms of the depth of volume. That has not been there. Why?
Well, that's absolutely right. We think that a lot of investors are still very reluctant to buy into equities, and that is mainly another element. A lot of cash is sitting on the sidelines. We will see further M&A activity, and that is in part where liquidity is heading to. And again, this is a booster for equities, as we think.
Right. You talk about M&A activity here. Which particular sectors will you see this, do you think?
Well, basically think and have identified several sectors.
Well, where things are excess capacity, in essence, is what you're probably talking about.
That's exactly right. That's exactly right. And we think that industrials, utilities, telecoms, although there's been a lot of concentration going on already, but still we think there is room for improvement. And obviously we think about banks. Banks in particular here in Europe, in Germany in particular, very dispersed, and there we think a lot of concentration will continue.